production result?
Seeing broad losses across the gold sector in general, but Perseus Mining today off around 6%. We saw December quarter production results released, and they missed their production guidance figures. Back in November in 2012, we actually saw them lower guidance expectations, but the results that they have released today has actually missed those lowered expectations by around 13%. So we're seeing the shares sold off quite heavily today, and this has also impacted on the costs for Perseus Mining as well. Costs coming in around $588 an ounce, which was above guidance as well. So that lower production hitting their cash costs as well. Now, Perseus Mining is an African-focused mine, does have mining over in Africa. It produces from its Edikan mine over in Ghana, and it's also developing several other projects over in Africa, including in the Ivory Coast, and further exploration projects in Ghana. But despite the issues that it's had, production coming in lower because of some mechanical issues with its crusher, there are some positives looking into the future for Perseus Mining. They've got a strong growth profile, looking to expand production up above 400,000 ounces per annum, and they are a low-cost producer. Their cash costs are relatively low compared to other gold miners. So being positioned within the African gold space, there are a few gold miners on the ASX which do have operations in Africa. And it looks like quite an attractive place, given that Africa has a very high rate of discovery of gold. It's also seeing the most growth in gold production throughout the world at the moment as well. So some of the miners that do have leverage to Africa in the mining space, Perseus One, maybe something like a Resolute, do have good growth prospects moving into the future.
Just another company I know you're watching today, also in the red, perhaps not as much, but Mineral Deposits, ticker code MDL, also falling on its quarterly operations review. What's the outlook for this company?
Well, this company is in the mineral sands space, and when we talk about mineral sands, we usually are talking about Iluka, which is the large mineral sands producer on the ASX. But Mineral Deposits is a smaller producer. It is within the ASX 200 index, but it's actually the 5th smallest company within that index, so relatively smaller than Iluka Mining, for example. But those shares off around 1.5% today. It released production results as well. I think what's really affecting the share price for this particular company has been the weakness in the mineral sands prices recently. Its main projects are over in Africa as well, in Senegal, and they've got processing plant in Norway as well. But the big issue, as mentioned, facing this company will be the depressed mineral sands prices. If we look at the likes of zircon, for example, through 2012 we saw a huge drop-off in the share price. And really, there's a massive amount of oversupply within this area at the moment. Current estimates of inventory levels of the likes of zircon is something like 6 months worth of 2013 demand in inventories at the moment. So significant oversupply, and a company like Mineral Deposits, who are looking to ramp up production at the moment, they're aiming to be to account for around 7% of the global supply of the likes of zircon and titanium dioxide. Really, they're ramping up production in an environment where there's a massive amount of oversupply, and mineral sands prices are expected to stay quite depressed through 2013 because of this. We could see a slow, gradual recovery in demand and prices, but really the inventories need to be run down first before this can happen. So I suppose increasing production is a positive for Mineral Deposits, but what's going to weigh on share price is that mineral sands prices.
Just more broadly, looking at the overall market today, it's been quite an interesting day's trade. I mean, we saw the ASX 200 shoot up over 4,800 points, that level there, and now head south into the red. Any ideas why?
Well, we often see round numbers in the market act as either support or resistance. We saw the ASX 200 touch that 4,800 level and then immediately retreat. So it looks like a bit of a psychological resistance point there at the moment. Obviously not a lot of leads from global markets with the US market closed, but all eyes are on Japan today with that Bank of Japan meeting. But really the weight on our market today, the big four banks, diversified financials, Telstra, all trading lower today and is weighing on the broader index. The standout performers are the iron ore players and also the industrials having a good day. But if we look at the ASX 200 from a technical standpoint, we have seen some very strong upward momentum and upward trend in the market over the past couple of months. But if you actually have a look at a chart of the ASX 200 and compare it against a momentum indicator such as the relative strength index, the RSI for example, there's actually a little bit of divergence between those two reads at the moment. You're seeing the ASX 200 making higher highs, but the RSI is above 70, but it's actually making lower highs, which is a bit of a bearish indicator when looking at the chart. So this could indicate that we could see a correction in the market, but at the moment the market's still trending upwards quite strong.